Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the Senior Trader at the Forex Super Model, and this is the weekly data cycle review for Monday the 10th of the 5th to Friday the 14th of the 5th, 2021. Basically, it's our version of the economic calendar, and we've modelled it and decanted it into a sort of a discrete Tier 1 and Tier 2 numbers. Right, so T1, Tier 1, T2, Tier 2, April, which is for the whole month, the last month of April, and then the first 2 weeks of May, which have been the trading weeks so far, 03, 05 to 07, 05, 10th to the 14th. Right, so we'll start off with China then. Right, so Tier 1 plus 7, 0 minus 1. The only other thing to mention is that that's for the whole of April, discrete, and this is cumulative. So this gives you like an idea of a trend in May, if you like. So Tier 1 then for China, plus 7, 0 minus 1. So we've got a neutral to slight deterioration there. Tier 2, minus 2, plus 5, plus 4. So we've got an improvement in the Tier 2. Dollar then, Tier 1 plus 10, minus 7, minus 5. So we've got weak May Tier 1 data. Tier 2 plus 3, plus 15, plus 20. And we've got accelerating Tier 2 data. So a mixed picture for the dollar. We'll wrap all this up in the analysis at the end. We're going to start this, so don't go away. Right, welcome back. Right, we've got Germany as a discrete country. The EUR as the 27 nation block. Right, Germany then Tier 1 minus 1, plus 3, plus 3. Tier 2 minus 5, 0, plus 3. So we've got positive German data coming through on the Tier 1 and a positive Tier 2 as well. So an incrementally improving picture in the German data cycle. The Euro as a block then, plus 3, minus 1, minus 1. So slightly on the soft side for Tier 1, plus 9, plus 2, plus 2, and starting to make a positive impression on the Tier 2. So we'll stop it there and do the next two. Right, we're back. Yen, JPY, Pound, GBP. Yen then Tier 1, plus 2, 0, 0. Tier 2, plus 16, 0, plus 3. So fairly neutral to erring on the positive Tier 1. Plus 16 stronger for April, and thinking about incrementally being positive Tier 2. The pound then, Tier 1 plus 5, plus 1, plus 11. Tier 2 plus 21, plus 1, plus 11. So strong April and looking like a strong May as well for the GBP. Right, here we go again. CAD, Canadian dollar, AUD, Australian dollar then. Right, CAD then, Tier 1, plus 4, minus 2, minus 2. Tier 2 plus 8, minus 4, minus 4. So reasonably supportive April, and we've got a slight deterioration in both Tier 1 and Tier 2 for May. AUD then, minus 2, minus 2, minus 3 for Tier 1. So soft really. And Tier 2 plus 10, plus 1, minus 1. So strong Tier 2 in April, and fairly neutral in May so far. Bear in mind that the Canadian data is skewed because they've been in lockdown as well. So stop there, last two. Right, we're off again then. New Zealand NZD, CHF Swiss Chuff. Right, Tier 1 New Zealand, plus 1, plus 2, plus 2. Tier 2 minus 5, plus 6, plus 2. So generally we've got a bit of a pick-up after April initially in the first week, and we've got a dropping off and neutral to positive in the Tier 1. So Swiss franc then, 0, 0, 0, Tier 1, completely neutral, plus 8, plus 2, plus 2. So on the positive side on the tier 2. We're going to stop this there and do the analysis and the summary. So don't go away. Right, we're off again. Let's start talking about the analysis then. So if you look at the sister video, which is the flow cycle for the period the 10th to the 14th, the last trading week, then you can see that we had an unopposed positive driver in the pound at plus 369. So no backdoor flows, and the opposing negative flows were mainly being sucked out of the yen, basically minus 347, and the euro was only minus 18 on the week, and the dollar was minus 4 as the negative rock. So basically you had pound strength driving the market, and yen weakness sucking up all those positive flows that were going into the pound in the form of negative flows out of the yen, and the euro and the dollar basically were dynamically static. So right, let's have a look at this in terms of summary then. So China, basically China then, their data cycle is pretty neutral. We've got -1 tier 1 and plus 4 tier 2, so it's pretty neutral, the China data cycle. And the dollar, you've got negative tier 1 at -5 and a very positive strong tier 2. So you've got a mixed situation there. So you've got a small negative and a big positive there, so it's pretty mixed really, the dollar. The German data cycle is on the up. The euro data cycle is neutral to on the up. The yen is neutral to positive as well. The pound is most definitely on the up. The CAD is a bit soft, so it's soft. But remember, the CAD is still in lockdown, the Canadians, so their data is a little bit misleading. The AUD is a little bit soft as well. What's happening with the NZD? The NZD is mildly positive, and the Swiss franc is neutral to positive really. So that's a summary of that. We've basically, what have we got? We've had this CPI for the week in question came in relatively strong, which upset the market sort of midweek, and then we've had the retail sales which upset the market again, but in the opposite direction. As they became fairly soft, despite these checks that were going out to the furloughed and the unemployed. So that's interesting. So what do we think? And what have we got happening next week? Basically, we've got China retail sales on Monday and JPY GDP. Tuesday, we've got the Reserve Bank of Australia minutes, and we've got GBP claimant and unemployment rate. And the Euro GDP, and ECB Lagarde speech on the Tuesday the 18th. Wednesday then we've got GBP CPI, Bank of Canada CPI, and the Fed minutes. So later on in our early evening on Wednesday. So it's all going to be sort of knocked about early in the week, and it's also going to be focusing on this Wednesday Fed minutes, which the market is getting fixated on inflationary expectations. But really, the Fed has already said they're going to run the market hot, and that these rising inflationary expectations we're seeing are transitory. Believed to be transitory. Right, so that's where we're at. So the likelihood we've had a relatively soft dollar. The likelihood is the dollar going forward is going to be soft. A soft dollar is normally suitable for this general environment is going to be suitable for commodity increases. I think the big gainer is going to be oil. Oil's been lagging, and we could see equities go one of two ways, obviously. But our gut feeling is that equities are going to have a hard time next week. I think the market's going to have a little wobble, and it's likely that equities are going to come off. And that will lead to a so-called risk-off situation. We're likely to get, normally when you get risk-off you get a bit of dollar strength, but you're likely to see this scenario in the markets where you get equities down and the dollar down, because the dollar is going to be viewed as basically degrading in purchasing power, and so you're going to see this whole macro boat fairly rocked, and therefore where will they be running to the hills? Well, you're likely to see yen strength is going to be a big feature next week. We've had massive yen weakness. You're likely to see yen strength next week, and you're likely to see the NZD come off, which will be good for us, because the NZD has been a right pain in the neck for us. So you're likely to see the NZD come off, and the yen come up, and the dollar and equities come off, at least until probably Thursday after the Fed anyway. So hope that was useful. See you next week for the daily briefing. Thank you very much.